Greetings from Bobby Chet and Associates. Welcome all to another episode of financial seminars and workshops from Bobby Chet and Associates. Today our topic is future of life insurance. What do we perceive of the future? What do we look forward and what are the changes we expect from the same? What we are going to talk about is attack the future. And first, let's welcome the future. Let's see what we have the current scenario today. This is one thing which nobody has anticipated before, but things that have never happened before happen all the time. Most of you will agree with me. Nobody had visualized COVID or any as such situation where the whole world would be under a lockdown. So things that never happened before happen all the time. People are smitten by the past. They usually are very risk averse and also have a very negative view towards change. Whenever you speak to people, they'll be very comfortable in wherever they are. But if you tell them to change a bit, थोड़ा सा तकलीफ हो जाता है. They are not very comfortable with anything which is coming new to them, and especially if they have to put in more effort, more time, more money. Change is not a welcome change. Current phase of insurance is a push phase. Developing economies in Asia as well as world across are the global growth drivers. The growth is there in the Asian economies, and in insurance industry, more than 50% of global premium growth has come from Asian economies, and India is one of them as well. This is the data which we have. In 2010, GDP towards developing country and developed countries towards premium. 85% in 2010 the premium was from developed countries and only 15% contribution was from developing countries. Whereas in a phase of 2010 to 2019, the phase has increased to 52% is now of the developing countries and 48% is left for the developed countries. So this is a good signal. Availability of data has skyrocketed. You all will agree that at a push of a few buttons, everything that you want for is easily available. Analytics and artificial intelligence will take over and have already taken over a great extent of life. If you see the fintech companies today, the kind of data that you research on Google, or if you are even seeing travel tickets, air tickets, automatically the ads that will come on your Google page and Gmail and everything, you will see that will be related to travel, hotels. So they are reading all your data already. Digital transformation, transparency, and service have totally changed the scenario of the world. Long back, if you needed an air ticket, you had to, if you people remember, there was a red, white color big page of Air India, a mini booklet kind of a thing, wherein there was the ticket was manually punched. Today, over a few punches on the computer or on your phone, your tickets are issued. So there's a huge change in transparency and also in service. Online purchases from web aggregators regarding insurance segment have come in a big way. Insurance aggregators, let's not name a few, but most of them have promoted insurance door to door at a very noble profession, and most of the people have started buying or at least researching online. They started as a comparative websites wherein they used to compare policies, but now most of them are selling insurances and some of them have become corporate agents as well. So that is the difference of a online search engine, a web aggregator turning into a corporate broker. Claim filing and access. Initially, the strategies which were used by insurance companies, the claim filing was very tiresome. Currently, policy informations are easily available. If a death claim came for LIC, the current procedures and the past 20 years back procedures, there is some changes. But in mediclaims, you will see the changes are dynamic. So same things will be coming to the life insurance segment as well. Influence of online platforms has raised the bar of pre-sale service. So whenever a customer gets a call from any of the web aggregators, there are a lot of questions which are answered on a pre-sale basis. So which initially were answered by insurance agents are currently answered by web aggregators themselves, the online platforms that are promoting sales. So till today, this was a push strategy. Even the online guys are making repeated calls to their clients and trying to close a sale. Accenture in 2019, a global financial service consumer study was done. It's clearly showing a signal that 6 out of 10 clients are willing to share their data. And especially if they are getting any benefit out of it, they are more than happy to do the same. Now, what is the data? Now, if you see even for LIC policies, life insurance policies, non-smokers rate is different and smoker rate is different. What is it clearly signifying? That the data analysis is taking over. Initially, the term insurance was for smoker, non-smoker, same premium. Very recently, the last few years, 855 plan has helped us understand the non-smoker rates are much lesser. And if you see female life, which is a non-smoker, the premium on the previous premiums is almost at a discount of more than 50%. So that's incredible sharing. And future of insurance is a pull strategy. Now, what is pull strategy? I would like to impress and implement these principles for you to understand what it is. Don't get scared about the future, but be aware where we can go forward. Clients will search online, and that is not going to be passe. It is going to be the norm in future. Most of the clients will choose their companies online, they will choose the product online, and they will choose payments online. This is what is going to happen. No longer will they require an agent face to face meeting to get a policy. So an insurance client who is prospective, he will go online himself, find an insurer online himself. Today also this is possible, but to a very small extent. But the future is, this is going to be 80-85%. The client, the prospect is going to give access to his personal data, maybe through some data links or maybe through an OTP password or something, wherein all medical records from his birth till today would be shared with the insurance company. All the ITRs, computations, past history of income, not only for the last 3 years, but since he started earning, will be shared automatically. The data would be available online. Family history, how the parents have suffered or not suffered, or they alive, not alive, what medications they are having, everything would be there in them. Currently, underwriting is done only at the proposal stage, means when you are giving a proposal form, your current health status is taken into account. But future wise, what I visualize, the medical records would be dynamic. So suppose last week your doctor has advised you blood pressure medicines, automatically it will reflect on your data and the insurance companies will have access to it. Your driving history, how many accidents in a year or in your lifetime have you done? How many scratches, and what is your temperament after any eventuality like an accident, road accident? What is the rage? What is the mindset? How troubled are you if the stock market investments of yours fall? And what is your reaction to it? Or if you meet with an accident or if somebody is hospitalized, what is your temperament? What is your mindset? What are your habits? Habits would be smoking, drinking, gambling, anything that can add risk to your financials. Not only your health but also your financials will be taken into account. And what are your preferences? Do you go for regular walks? Do you go for your health checkups? Do you maintain your lifestyle issues? That all would be taken into account. 84% of pension is purchased by Asians, developing economies, in 2019 2020, whereas initially only annuities were purchased by developed nations. But now the scenario is changing and the ticket sizes have been bigger, and you will have access to global clients. Currently you have access to Indians, overseas Indians, NRIs, and people born with Indian origin. That's all. but imagine if you're selling a policy to a UK citizen born, brought up, and staying in UK, or one is an American citizen, never came to India, never intends coming to India, but you can give him a policy online, staying in America. So that is also going to be globally a bigger market. Asian economies will dominate the insurance industry. Somewhere you will see this change, and India will be one of the leaders in insurance. Entire data would be third party outsourced. The amount of data that you collect for on behalf of the client from the prospect and you submit it to the insurance company, maybe your role will be zero in this. Entire data would be outsourced through agencies. Wherever there is a large sum assured, it would be something not as par with the CID inquiries or something, but nothing less than that also. So his entire data would be rechecked from other sources. The insurer, after getting all the data, all the history, will give quotes of different products depending upon the occupation. वो आज भी we today also we have that scenario wherein occupational hazards are taken into account, his habits and vocations are taken into account, his hobbies are taken into account. So if is fond of bungee jumping, his premiums would be different. If he's fond of adventure sports, and other person who's very simple, who's nothing to do of adventure sports, doesn't travel much, and even if he travels, he prefers the public transport, his premiums may be different from the one who is having all these international sports, adventure sports, and other things. Online health and wellness guidance will be given by insurance companies. So suppose if some person is staying at home due to COVID, the weights have increased of most of the people. So they will be guided online how to reduce weights. There will be yoga sessions, all sorts of Pilate and all sorts of trainings will be given, and the person who's genuinely found doing the training will be given discounts. There'll be periodic health checkups in life insurance. Initially, what is stage one underwriting only, this will be a regular underwriting. Premiums will change every year or maybe every 3 years. It is not going to be a level premium henceforth in future. This is my, again, I would put it like my visualization. Why? Because they also want healthy people in the business. Every insurer wants the best rates for people who are healthy. So a person who's 22 years young, standard height, weight, standard blood pressure, and other ratings, and good family history, he will be offered discounts to a great extent. His premium probably would be one fifth of a person who's unhealthy. And as he turns older and as his health conditions change, he will also have to bear the brunt. His cost will go up. The premiums for his policies will go up every year or maybe every 3 years, depending upon his lifestyle and what he is doing precautionary measures to take care of his health. So this is what I visualize. No medical checkups, no delayed underwriting. Now, what I mean by no medical checkups, your height, weight, BP ratings, this will not be taken into account because it is regularly monitored and it is already there in the third parties. The companies that will monitor your health for your policies will already have all your data, and once you propose an insurance policy, the underwriting currently, which probably takes for a large sum assured maybe a month or maybe more, would be minimal because the job of the underwriter would already be done because his data will already be there, and half of the results, the right underwriting processes, point wise, age wise, health wise, habits wise, everything will be point based underwriting. So the marks would already be given by the system. So the underwriter's job would be much more easier. Automation in insurance. Once the quotations are given, there is a basket of options given. Insurer would give options wherein what are the riders, what he wants, what are the investments he wants. There could be a basically a nominal cost for mortality, but unlike ULIPs, what you have four categories today wherein you want to invest in a equity product, a balanced product, a debt product, whatever the options will be very different. So if he has chosen a product, say he's chosen something similar like a ULIP, it will not be exactly a ULIP. If he chooses a mortality term insurance cost, which that component will change every year, but the investment component, he can probably choose Reliance Industries as shares instead of the bond fund or the equity fund. He could choose some specific sectorial investments where he wants to invest. So that option is much available in future. Now, after the options are given, the client chooses one. And once the client accepts one and pays for the premium, a video session is arranged by the insurance company with the client, wherein the entire aspects of the policy are re explained each point to point before the policy is confirmed. And the insurer offers a lower premium, stating that if you maintain this lifestyle, like we just spoke about some time ago, if in a month 15 days you are making a standard walk of 30 to 45 minutes, your premiums would be at a discount. So that is one thing which would be helping clients to lower their premiums. Couple of years in the policy, once the client is not even informing the insurance company, but the client has become a parent, there's a childbirth in the family, auto update and increase of cover informations are given on the same contract. He does not have to buy a new contract. So he is congratulated by the insurer, stating that the new child is welcome to the family. These are some benefits which the child insurance for health would be given from birth. And moreover, a few text interactions with the chatbot. Client again is talking to the agent to increase the life cover, and there would be just one product, life, health, and wealth all will be bundled into one product. So his family floater, you call it, or a term insurance, you call it, or his investment policy, all will be in one. Few years in the policy, premium increases depending upon change in habits. Health changes, auto upgradation. Suppose this guy was 25 when he bought the policy, he got married, he got a child. So every stage his life cover increases. And once he is detected with any life threatening disease or any ailments like a blood pressure or a diabetic, so health changes are auto upgraded in his policies, and his premium is auto adjusted. He does not have to give them information. It is already through the system. They know what is his health condition, and they know that if he is buying medicines and consuming medicines on a monthly basis on the routine prescribed by the doctor, and his purchases are matching what he's bought, he yet is having a normal upgrade in premium. But suppose his purchase of medicines have dropped and his consumption of medicine automatically coincidentally drops, so his premiums will be skyrocketing again. The agent and the client once decide to increase the covers, the adjustments can be done on the same contract as I mentioned. And healthier lifestyle, the increase in premium, though the age has increased, will be minimal because he's maintaining his lifestyles. Initial purchase, whatever he did, probably when he bought the policy, he was more into term insurances because his investment capacity was lesser, because his income was lower. But as his risk tolerance increases, his investments also increase, and rebalancing of the portfolio happens whenever he wishes. Depending upon major changes in life, every 5 years as a standard, the profile would be rebalanced as per the interaction between the agent, the company, and the insured. 15 years down the line, the agent has retired who initially gave the policy. So the new agent is appointed by the insurance company to serve the client. His entire history from the day he is born till today, health history, family history, he has to go through rigorous training about the client, knowing about the client. Only then is the client allotted to the agent advisor. Fast forwarding 25 years, the children of the client have outgrown, they have left the house for their own businesses. Now, attention has shifted for the client from mortality protection to ensuring the client and the spouse enjoy comfortable retirement. So, Joe, initially the term insurance costs, which were higher and getting higher by the day, after 25 years, once the children are out of their comfort zone on their own, earning their own money, there is no need of mortality cost. Now, what would be more important for the client would be long term care. Now, what is long term care? Long term care means any facility which the client needs at his own house should be provided. There is no monetary limit. And if he does not want money come into the account, there are gated communities like the people wherein are taken for old age homes, but they are not like those ashrams or any place wherein they are subsidized. So it's standard living conditions for all, and all sorts of provisions are given. So the conversion of a policy, a term, and an investment either goes into long-term care or non-monetary benefits into a gated community, wherein their security, their safety, their health, everything is taken care by the policy itself. What is the paradigm shift? Insurance covers from premium focus will change back to sum assured, and the average sum assured would be 100 crores. This is my visualization. The cost of insurance would be reduced significantly, and covers change requirements. So do premiums every year. Maximum 3 years, the premiums will change. What do covers change mean in the sense? Currently, why are they level premiums? Because it is easy to regulate. But what if each segment of the client, suppose doctors who are only neurosurgeons have a separate database, doctors who are MD who are specialization in personal care, or engineers who are talking only about software, and engineers who are on mechanical divisions for vehicles. Every segment of client is separated, every segment's risk cover is separated. The cost of insurance will fall drastically for good lives. Currently, what is happening? Everybody is almost in the similar thing except for occupational hazards like a sea diver, or probably anybody with a fire extinguishers or business, or maybe fire tenders. They are working with fire brigade, army. So those are the people who are charged occupational hazards. But the discounts are not given for average life. What if the good and healthy lives are given discounts? So that will matter. And every 3 years, the premiums will be balanced. The bundle products, as I said, would be health, wealth, life all in one. And travel insurance would not be restricted to like domestic travel within India, international travel, anything outside India. The domestic travel would be anywhere on earth, and international travel will be space travel or traveling to different planets. This may be seeming to few of you as a distant future, बहुत दूर की बात लग रही होगी, but the journey between the relationship between the client and the insurance company would continue to go a long way, and systems will replace the insurance companies and advisors. If we Now this also is a data, population aging data from United Nations Department of Economic and Social Affairs. By 2030, the number of people aged 60 and older will grow by more than 50%. In 2015, there were 900 million, and it will be 1.4 billion people who are more than 60. So, living too long is going to be a bigger risk than dying too early. Future ahead, achieving these goals to maintain your clients will neither be immediate nor easy. In future, potential customers will question value. What is the value that you are adding to the client? That is going to be the deterrent and the main factor where the client will choose an advisor. Survival of the fittest, that is surely there. Personalizing every aspect of customer experience, that is going to be important. Developing innovative product solutions and reinventing yourself, this is where the survival will happen. 25 years ahead, requirements, all future healthcare, hearing aid, physiotherapy, Alzheimer's, cancers paid without limit, and there will be no effect of inflation on these items. So once your policy, say you bought it at 25 and you are paying till 60, 65, 70, whatever you choose to work till and pay till, after that, all these facilities, if need, would be provided free of cost and with no upper cappings. And there will be no liability to pay after the day you choose of retirement. Initially, they will be charging you a bomb, but later on, when you are in your older self, maybe there is no premiums to be paid. And if there is somebody who's dying early and there is some corpus left, automatically, like today we have policies with nominations, these nominees will get the money, but they will have data in front. So no proof or bank details are required for nominees. If he is a nominee and you've not changed it, if the person dies, automatically the money would be transferred. You don't need death certificates and all those papers. That's the future, because it will be again auto upgraded in the systems. So I'll just put it in a synopsis. Tailor made to the behavior of individual customers. As you want, the policies will be tailor made as you want the policy. Second would be integrated engagement platform facilitates data, means everything will be through the systems. Your birth data, your health data, your income, and your habits, everything will be in the data. Pricing ease increases with more tailored pricing and smaller risk pools. As I said, doctors with specialization, the MDs, the MBBS, the super surgeons, in doctors there will probably be 30 categories to have a risk pool. So the pool will understand the habits of the people, will understand the risk of the people, and automatically more the data, the cost effectiveness will be transferred to the clients. Algorithms will do the job instead of the advisors to a great extent. Lines between life, wealth, and health products blur as integrated solutions will be there. Means everything will be bundled into one product. Manual underwriting will be a norm of the past. Artificial intelligence will take over, and algorithms will provide interventions. Digital channels will actively influence. So whenever there is a childbirth, as I put in, there will be a message to the client to increase the cover. If there is any health emergency, there will be a message to the family that this person is suffering, so you can take care of him at so and so hospital. So all those things will be auto generated. Currently, the trigger points are health. So that will be more organized than ever before. So what is there for us? What is our future? If we add value to our clients, if our presence does not add value, our absence will not make a difference. I just love this line because this is what the future is for us. If we are not giving value to the client, even if we are not there, for him we will be no difference. How many of you might have replaced their local grocer because he was the one where you had to stand in for some time, pick up your purchase and go home? What has happened now? Everything has become online. Even the local grocers, there are apps which deliver your grocery from your favorite local grocer, or maybe much more cheaper. DMart and all those services have helped people understand that the grocer is an outdated chapter. Are we the future grocers? Are we going to be outdated? If we don't add value, surely we will be outdated. So remember these four things, which are the core of insurance agency. Four non-compromising needs. Maintaining family lifestyle for the client. Is it a norm? Yes. Children's education, children marriage, and retirement. So these things will never change. Even if there is system generated, people are buying investments or insurances. These four core non-compromising needs will always be there. Reasons that hold me back. I'm putting that to you very honestly. Expectations of acceptance without efforts. Now, my past says that I have done so much. I'm educated to a certain extent, so I should get easily accepted. That will never happen. Relaxed attitude because my income is stable. That is also one deterrent for us. The more the hunger, the more the work, and more the work, more the result. Why should I ask for a sale? It should come to me. Now, this is one problem most of us are facing. Another one is referrals will be asked after the processes are done, after the proposal is complete. Don't wait for referrals to be done later. Even in your first meeting, you can ask for referrals. Presentations will happen when I have the time. Don't have that attitude, please, because presentations need to be done regularly to survive. I'm going to share this. Share the objections you face. Everybody faces problem. Everybody has fear. But what people say and what people actually expect results. Now let me put it in a very simple way. I want to lose weight. That is my expected result. But I fear that I don't want to get up in the morning for a walk, and I don't want to go in the evening for a walk. I don't want to cut on my food habits. So will the expected results come into the picture? They will never come into the picture. What is the greatest hope? I hope all of you pay little attention on this because this is an important slide. We all hope to be financially secure. Correct me wherever I'm wrong, please. To have happiness and security in the family, to be carefree in old age, to be sure that my family will be secure, to retain my health and my job, to have the respect of my family and friends. And to sum up, the greatest hope in life is hope of security. Do you all agree with it? What does the client want? He also wants hope of security. Nothing else. He also wants the same thing. He's also as human as you are. What is the greatest fear in life? Not being able to carry on self and family, sickness and unemployment, पॉवर्टी एंड डेथ. ये हमारे फेयर अकेले के नहीं हैं. बुढ़ापे में हम किसी पे अधीन होंगे, ये सब फेयर्स सेम फेयर्स हैं जो क्लाइंट के भी हैं. These fears add up to insecurity. And what does the client fear? He also fears insecurity. That is the reason he's interacting with you. We know where we are today, we know the present, we know what we were 5 years ago. So P is present, P minus 5 is 5 years ago. We have to design P plus 10, P plus 15, and more. We know and can plan according to our goals. Ensure not because you are going to die, because the families behind have to live. This is what I have to share about future of insurance with you. Thank you.